Welcome to this week's Cattle Call. I'm Susan Littlefield. An interesting week. We've got weather, we've got crazy grain markets, we've got fund movement, deliveries, you name it. We're going to try to hit as much as we can over the next 5 to 6 minutes or so. Brad Kooima is joining us. He is at Kooima and Varlick out of Sioux Center, Iowa. So let's start out with this happenings of the cattle market, increase in deliveries that you talked about coming in on a Tuesday.
Right. I thought that was probably the main item of interest this morning, Susan, that the market had to respond to. 66 notices posted yesterday, 60 of those in the deep south, 6 of them were in Nebraska. Well, function of the market here is, I guess, is to, when you have the basis that's wide like this one was until today, it's up to someone if he wants to make the delivery. And I was a little surprised at the magnitude. I was a little surprised where they were. I mean, the north is a much bigger discount to the futures than the south is. But nonetheless, what happens then is, of course, if you're a long speculator in the Fed cattle, and you're going like, well, I really don't want delivery. And if they're going to start delivering that many, the delivery dates will get moved up quickly. And what that does is just triggers selling. And that's what you saw today, where February led the way to the downside, followed closely by the Aprils. Got a little bit of, let me finish the delivery thought first. I would be curious to see tomorrow, Susan, just exactly how these deliveries are handled. If someone would demand them, for instance, that would shore up the attitudes here real quickly. Yeah, there are, in my own mind, I could probably draft a scenario where that could happen. And that's largely because of the big premium that the Aprils are, so if you don't catch the deliveries till the third week of February, they're all sorted up, they're all nice, they're all graded, whatever. Carry the cattle for 4 or 5 weeks, you're probably looking at the ability to turn around the cattle and sell them for $7 more than what the Fed cattle are. So we'll see whether there's someone that wants to step in front of us. Certainly not my game. So maybe we'll have a better understanding. Otherwise, I don't know, the big deliveries doesn't really bother me too much. Now we've got a fair basis, 114 to 15 and a 116.12 cash. So I think we're finally, we've aligned.
Can we get current, considering where we're sitting with the current grain prices?
Well, that might be finally, what does it? We've been talking about these average weights forever, right? I mean, since March, since we slowed down the kill. When we finally got our kill back, then we went through arguably the most perfect fall, early winter feeding period maybe in modern history, so performance was off the charts. But now the weather's changed just a little bit. We've had a couple of snowstorms, bitterly cold weather. But more importantly, I think, like you said, the cost of feed, the cost of corn here. Talked to a big feed yard in Kansas yesterday, and they were 80 over March. So, you're talking about a 640, 630 cost of corn. And even up here where it's, in the mid fives, it's certainly the cost of gain is higher than what you're getting paid per pound for it. Now, usually that is a quick turnaround. And, guys, in the short term, unfortunately, that makes a lot of people very easy and willing sellers. Part of the reason probably why our cash market seems so sluggish. But ultimately, once you pull that weight down, get yourself nice and current, finding maybe our industry can get just a little leverage back and a little less meat going in the pipeline.
So are we going to see less supply cattle come March?
In my view, yes, at least in my neck of the woods. And that would be contrary to some of the other fundamentalists, I guess, those analysts that try to still work on the numbers. Yes, I can recount too that Iowa, my backyard, based on the cattle on feed reports, whereas for the first time going to have more cattle in the first quarter of a year than it does in the fourth quarter of the year prior. Very unusual because, a lot of calf feds, right? And those typically the seasonality of those cattle go in October, right? So it was different. I think some of that was influenced by drought. Some of it was influenced by the inability to get cattle moved on a timely basis all the way back to the COVID stuff. But what I believe and what I see in my neck of the woods is that because of the ideal weather, I think we've actually then took those cattle and pulled them ahead because the performance was so good. I really think there's less cattle in March than there was in January. And I'm hoping that Like a good friend of mine always used to say that once in a while it pays to have manure in your boots, right? And I would hopeful that maybe we can surprise some in the trade by finding out that there isn't that excessive number coming at us here, that wall of cattle that people are talking about.
Looking at the cattle and the current weather that we're in, obviously we can expect some weight drops to happen in the next couple of weeks as we get through this next week of bitterly cold temperatures.
Well, I would love to just promise it, but there's no such thing in this deal, of course. But to me, the combination of the high cost of gain and with a shift in the weather, that the guys that I'm talking to and hearing from are pretty quick and willing sellers. I would like to think that when we get a couple of weeks down the road and we're doing this again, that we can talk about, finally we found a significant drop in the weights, maybe got those weights closer towards what we were a year ago. We're still about 17, 18 pounds over a year ago on the carcass weights, but that can change very quickly, and one would think that there'd be a decent reason here now to think that could happen this time as well.
Let's just get through this next Sunday, Monday worth of weather and see what it brings us.
For sure. The South is supposed to get some snow too. Kansas and Panhandle, it's a great spot for it, and maybe that'll help a little bit too.
All right. Sounds good. Thanks so much, Brad, for joining us this week.
Very welcome.
Just a reminder, folks, commodity futures and options involve substantial risk of loss and they're not suitable for all investors. That's this week's Cattle Call. I'm Susan Littlefield.